Hey crypto friends, for those of you who are new to the channel, my name is Garrett and I am a crypto day trader who absolutely loves trading with moving averages. And in today's educational video, I'm going to explain to you guys why you are probably trying too hard when it comes to trading the crypto market and how you can make it a lot easier for yourself. Now, for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you're from the United States like I am and you want to trade crypto futures, you can do it right here on the Blowfin exchange all day, every day. All right, guys, so if you are losing at day trading, all right, if you're the type that is constantly finding yourself losing with day trading, you're probably just simply trying too hard and or making things harder than they realistically need to be, and all it's doing is confusing you and veering you in the wrong direction by continuing to just make things harder for yourself. So if you are somebody who, one, either fills your charts with a shit ton of useless indicators that you don't even need, or you make your buy and sell decisions solely based on overbought and oversold levels on stuff like the RSI or the MACD indicator, or you're one of those types of people who tries to copy what various influencers are doing on X, or you're trying to copy trade other people's trades on various exchanges from, Twitter or anything like that. Or if you are the type who is trying to catch the next big meme coin and you're technically profit chasing, you are probably trying too hard at trying to make money in this market, okay? Realistically, I don't do any of this stuff, okay? I don't fill my chart with a bunch of useless indicators. I don't make my buy and sell decisions based on overbought and oversold levels. I don't try to copy trade from other influencers on X or Twitter. I don't try to copy trade other traders on various exchanges, and I'm not trying to catch the next big meme coin either, all right? Because realistically, that's not how you learn and that's not how you trade in this market. It's just not going to work out for you, and it's not going to work out for you long term if you're trying to do that. The overall goal here, if you're trying to learn to be a trader, is to teach yourself how to trade the crypto market, okay? And the reason why is because this is a very valuable skill that can last you a literal lifetime. Once you know how to trade and you've got a very solid, good system down for yourself, you can literally use that system for an entire lifetime of trading, okay? So if you're doing any of these things, you're simply probably just trying too damn hard and just making things way more difficult than they realistically need to be when it comes to day trading the crypto market. Now, instead, what you want to be doing is you want to take a step back. You want to write out your trading goals, whether it's to earn a certain profit percentage on a daily basis, a weekly basis, or a monthly basis. And then you want to simply just formulate a strategy for yourself when it comes to overall charting out the coins that you want to trade. But only using basic tools to minimize the amount of extra noise that gets in the way that you realistically don't need, okay? Because nobody needs all of this redundant bullshit that a lot of people put in their heads when they try to trade the crypto market, okay? I realistically can't tell you how to do this. I can't realistically tell you exactly how to trade, since realistically, all of us have a different personality and we all trade differently. Literally, this is the reason why so many different trading strategies exist out there, because every single person is a different person. Everybody's got a different personality. Everybody trades differently, okay? For instance, strategies that some of my crypto friends use, I've tried them before and I can't use them. They don't work for me whatsoever, all right? Just like my strategy that I use for day trading, some of my other friends have tried before and it doesn't work for them because they have a different personality than I do and I have a different personality than they do. Therefore, we trade differently, all right? There's nothing wrong with it. It's just how people work, okay? So this is what I'm talking about as far as you need to, this is what I'm talking about when I talk about, or when I say that I realistically cannot tell you what to do. But I can tell you what I did when I realized I was making trading more difficult than it actually needs to be a few years ago, okay? Because I used to do all of this stuff years ago when I first started trading also, okay? I was the type of person where I tried to copy every trader on X. This was like 2 years ago. I tried to copy every trader on X. I tried to copy what other people were doing. I tried to, base my buy and sell decisions off of overbought and oversold levels, and it just wasn't working out for me, and it's not going to work out for you either if you're trying to do that, okay? So in my case, in the past, I used to use For instance, as far as all the indicators I used to have on my charts back in the day, I used to use stuff like I used to have the volume indicator on my charts. I used to have the RSI indicator. I used to have the MACD indicator. I used to have Bollinger Bands, and I used to have another different form of volume indicator on my charts as well. And I used to have moving averages all on my chart as well at the same damn time. So overall here, guys, I used to have about 6 different indicators on my chart that you see here at any given time. And it was just way, way, way too damn much. All right. It was too much. It was causing way too much noise in my head. It was causing me to make all kinds of shitty decisions left and right. It just was not working out for me whatsoever. And then I finally realized, well, shit, you really don't need all of this. All right. You really, really don't need all of these indicators to be successful. Okay. So these days, the only tools that I personally use in my charting are basically exponential moving averages. And I use these for dynamic support and resistance. For instance, whenever I need to see dynamic support and resistance, I turn on all of my EMAs here, which is the yellow line, the pink line, the orange line, and the blue line. Okay. We've got the 200 EMA, we've got the 100 EMA, we've got the 50 EMA, and we've got the 20 EMA right here. All right. So when I need to see, depending on what time frame I'm trading on, when I need to see a different range of where I think price action could eventually drop to, or could eventually rise to if we're coming out of a downtrend, I turn on my EMAs to see where these different various levels could be, because usually price likes to follow these different moving averages on a higher time frame. As you can clearly see here on the daily chart for Solana, it happened right down here on the 200 period EMA when we were coming down from this downtrend right here. You can clearly see we bounced right off of it, went back up. All right, and you can clearly see it happened again right in here, came back down to the 200 again, went right back up. All right. Same thing right here. When we were starting this bull trend going upwards, when we ended up having a small correction, we ended up coming all the way down to the 50 period EMA and bouncing right off of it and going back up. All right. So that is why I use EMAs for dynamic support and resistance. Okay. All right. Now, the other thing I use here is a simple moving average, okay? Now, I use this 7-period simple moving average simply for confirming my overall biases here, okay? I make a lot of my decisions, or I confirm a lot of my biases based off of where price action is in relation to where the simple moving average is here, right here, okay? So, for instance, a recent trade that I did end up taking a while back was obviously this big Solana move that went to the upside here. All right. I saw that price action came all the way down to this support level right down in here that we created back here, came all the way down to this level. We ended up bouncing off of it and going over the SMA right here, but I still didn't have confidence in it yet, even though it went all the way back up to here, and it ended up coming back down. So we clearly didn't have enough momentum going on right there, but the fact that we did end up going up right there tells us that we did have bullish momentum going on, just not quite enough to continue the move going up even higher, okay? So we ended up coming back down, and when we did come back down, we ended up coming back down to this same level once again, all right? And then we ended up eventually breaking up and going past through this simple moving average right here with all kinds of volume. All right, we came through it with all kinds of volume. I ended up getting into this trade pretty much right in this area, and I ended up riding it all the way to not quite the top, but I ended up riding it to around this area right here. Now, what happened here was I used the overall breakage of it going past the 7-period SMA to tell me that bullish momentum was back and bullish momentum was continuing to grow, especially with how big the candle was in deviation to the simple moving average that we've got going on here as well, okay? So that's just something to keep in mind. Now, another indicator that I use here is outside of the simple moving average, I also use price action itself, consisting mainly of candlestick patterns and range-based support and resistance levels as well, okay? Now, what I mean by that is by candlestick patterns, what I'm talking about are, for instance, this candle right here, all right? This was one of my indicators that told me that bullish momentum was starting to build, all right? And the reason why is because we had this very strong support level down here, and price action ended up going all the way down here, but within this candle, it did not end up closing way down here. It actually ended up going way back up, and it ended up closing actually above this support level, which told me that, okay, bulls are still here. Bulls have not given up yet. Bears are still not fully in. Bears have not fully grasped onto this trend right here. And bulls are starting to take over again, because obviously we ended up creating this long wick down here. We ended up closing above our support level. That tells us again momentum was continued to stay strong. And look at that, the next candle we opened up green, and we started heading higher, and then we broke through this simple moving average, and we continued going higher and higher and higher. All right, so that is one of the first candlestick patterns that I'm talking about here, as far as stuff that I look for here, as far as overall candlestick action itself. Now, here's another perfect example of what I look for also. This is another candlestick pattern that I'm talking about also, okay? So we can clearly see this is technically a bearish spinning top candle. And the reason why is because obviously, realistically, structurally, it is considered a bearish spinning top, because realistically, we can't call it a shooting star candle because the body of the wick doesn't go all the way to the bottom down here or anything like that. So yeah, realistically, it's a bearish spinning top. But you can clearly tell that we had this top come up right up here on this previous green candle, and then this next white candle, or this next candle that opened, we ended up going very, very high, much, much higher, but we didn't close above the previous candle, okay? As you can clearly see, yeah, we did end up going up, but it retraced almost immediately and went right back down, and we actually ended up closing underneath where our previous close was, which tells me right there that, okay, well, this is a very, very bearish candle. We have lost momentum, and we are probably going to start moving to the downside here, which obviously the next candle opened, and we did start moving to the downside right there, okay? So that's kind of what I'm talking about here when I'm talking about looking at overall candlestick patterns as well, okay? Now, the next thing I use is obviously range-based support and resistance, okay? Now, what I'm talking about here is overall range-based support and resistance is basically what I do is, and some people do it differently. Some people have all kinds of different levels of support and resistance on their charts. When I'm trading in any given trade, I usually only have four different levels of support and resistance. I usually have 2 levels of resistance. I have 2 levels of support that are going on. So realistically, I only mark out the bottom 2 most important support levels and the top 2 most important resistance levels, as you can see right in here, okay? And these just help me to be able to kind of stay focused in the overall range that price action is currently trading in, as you can clearly see right here. And realistically, it works out great for me. So overall here, guys, this is kind of what I am talking about as far as keeping things simple. If you keep things simple and you get used to keeping things simple, your trading will become much, much better. And the reason why is because you don't have all this extra noise from all these other different indicators going through your head, kind of telling you, what you should be doing or what you shouldn't be doing, or should I buy or should I sell because we're oversold or overbought? You don't need oversold and overbought levels to tell you if you should or shouldn't buy or sell or go long or short or anything like that, all right? Keep things simple. Simplicity works very, very well. It works great for me. It can work great for you. So overall here, if you guys have any questions about anything like this, feel free to go ahead and reach out to me. I do have a Twitter account right here. You can go ahead and give me a follow at Garrett_N_stuff, and feel free to send me a message too if you would like. But other than that, guys, before I go ahead and wrap up this video, if any of you guys want to see more educational videos like this, I do educational videos on a regular basis. I love education. I love helping people out with their trading, especially if it's the type of trading that I do. And if you guys want to see more educational videos, just come over to my channel, go to playlists, and I put all of my trading education videos right here in my technical analysis playlist. And yeah, if you guys have any questions or concerns, just feel free to reach out. Other than that, guys, before you guys leave, if you enjoyed this video, be sure to go ahead and subscribe to the channel. Hit the like button below the video to help me out here, and leave me a comment below on your personal thoughts of this video. And with that said, big thank you to all of you guys who stuck around and watched this video throughout the whole thing. I appreciate all of you, and I hope to see all of you in my future videos.